Kevin Hincks, co-host of Fast Market, live from the CBOE, is with us. And as I was saying, this sell-off is different. I mean, people were talking about Black Monday. They've talked about COVID. They've talked about all kinds of issues where we saw selling, Kevin. But this is different because you have front and center the tariffs and that story that continues. What are they saying there this morning? Good morning.
Good morning, Nicole. Yeah, you're right. You're looking at a remarkably headline-driven market, right? If you look at the data we got on Friday, it proves it because we had a Goldilocks non-farm payroll unemployment number on Friday, and the market didn't care. They're driven by worries about tariffs. And now, the one significant thing overnight, other than the futures coming back significantly off their lows overnight, and you're right, Nicole, a lot of traders, myself included, didn't get a lot of sleep last night watching futures overnight. But they've made a pretty remarkable comeback. But the most remarkable might be in the bond market. You've got the 10-year yield now higher on the day after trading as low as 3.84% overnight. The 10-year yield is now higher, over 4%. That is telling the market something. And so we're watching some of the, there's so many headlines. The one headline that really caught my eye was Kevin Hassett from the Trump administration yesterday and this morning, talking about 50 countries have already reached out and come in to discuss new trade policies with the Trump administration. So there might be some movement in some of these headlines that have rocked the markets for maybe Thursday, Friday, and overnight and into this morning. Now, we're still down 2% plus on the markets, but we are, as you said, we are significantly off the highs. What else do we have? We have inflation data coming out, more hard economic data coming out this week. We've got the beginning of earnings season with banks, Wells Fargo, JP Morgan, and Morgan Stanley coming out with earnings on Friday. We're going to have a slew of Fed speakers. We get Fed minutes this week. There's a lot here, but all that is being pushed to the side as headlines are driving this market, Nicole, right now. And that is what is going to drive the volatility. You're going to be looking at your screen today if you're watching the markets all day going, all right, well, what just happened? What announcement? What was there just a headline that came out? The markets are thin. They're whippy. The VIX is sitting at 48. That's all you need to know about the start of these markets, except expect choppy markets, Nicole.
The Fed announcing a closed-door meeting at 11:30 a.m. Eastern time. The president has been calling on the Fed to cut rates. Of course, now people are pricing in 5 cuts this year. I mean, now they're really going on the other end of this. But it'll be interesting to see whether or not the Fed steps in and does an emergency cut of some sort between now and the next meeting, right? And the Fed, of course, just last week, we heard from Jay Powell saying that they wanted to stay the course. They are in the proper position to wait and see. But there is a lot of pressure on the Fed to cut as soon as possible, I would think. You also have Jamie Dimon talking about tariffs slowing growth. You have many big leaders coming out and questioning the tariffs while others are supporting it. And you even have President Trump himself saying you have to take the medicine and see and wait. And that, have some patience. I have traders here who liked my red shirt, say wear it every day this week. That's what we're going to see. Whereas there's even one trader just said we're going to be up by the end of the day. So it just seems we have a lot of uncertainty. And here's your exact quote. Sometimes you have to take medicine to fix something. And Trump trying to provide a sense of calm.
Remember, Nicole, the one word, the 2 words you're hearing a lot right now are if these tariffs get put in, if the economy slows, a lot of ifs, and a lot of things like, well, it could cause this. If it happens, it could cause these problems. Markets are making what they always do. They make the assumptions on the worst case scenario. That's where the markets go to, and then they work off of that. So I think this is a market where you have to watch the headlines, and as they evolve, I think that the overall U.S. economy is fairly strong. We're going to get some earnings out starting this week and into next week, and the guidance will be critical, but it's going to be a headline-driven market, Nicole. Benjamin Netanyahu's going to be at the White House this afternoon. I'm sure there'll be a statement made about their negotiations, not only on the war in Ukraine and but also on trade with them. Remember something. I think here's what a lot of people, in my opinion, are getting wrong, Nicole, and that is inflation. There is no way inflation is going up with crude oil down 15% in a week. Just no way. It's not possible because crude oil dominated the inflation when inflation was going up. So the fact that crude oil is near $60 and working its way lower, and here's another thing. Remember, if crude oil were to get into the mid 50s and low 50s, you know what happens, Nicole? Two wars from Iran and Russia run out of money. So two wars could stop based on lower crude oil prices. So there's a lot of things going on, but the dollar is lower. Yields have come down, although they're slightly higher this morning, and crude oil is significantly lower. All those three things, the silver lining in all this conversation, those three macroeconomic drivers are all better for the U.S. economy, Nicole.
I'll tell you, I feel really differently than I did overnight. I started to wonder about capitulation. There was a sense of a little bit of the fear, the panic. We began talking about the circuit breakers again. I was looking at those on Friday, frankly, sort of getting ready to get ready. And overnight, you started to see selling abroad. We saw the DAX, for example, that was selling off. Japan futures had paused. We saw circuit breakers going into effect, only to see some of these come up off the lows of the day, coupled with the fact that you had the VIX above 60 at one point, and now that too has pulled back. So it certainly feels like there's a little sense of calm here as the opening bell just feels moments away. A final thought here, the dollar even has strengthened a bit. The 2-year yield, the talk there is that the 2-year yield is really pricing in more Fed cuts. And to your point that fewer people are worried about inflation now and that the Fed will cut. And I think the bond traders and experts that I've been talking to that have a global footprint, one expert this morning was talking to me specifically about yields and you look to the bond market for the story.
Two things real quick. The number one, yes, the foreign markets are down. That's working against our markets. But the good news about that is the U.S. markets drive the world. So once our markets open, their markets will react to ours. And those leaders of the foreign markets, and they're all down this morning, they also see what they're doing, and that will make them negotiate as well. Remember, the final goal of the Trump administration is free and fair trade, and for the tariffs to come off across the world. So that is what the end game is here. And I think the fact that the 10-year yield is now higher on the day is a pretty significant thing that investors should be watching, Nicole. Still choppy markets ahead, though.
Kevin Hincks, great to see you this morning. I just want to ring the bell. I'm like, let's go.